Good evening. Ira Epstein of Linn & Associates with your metal market wrap-up for this Wednesday, the 15th of December. I couldn't get that out for a few times. 2021, we're about 6:20 at night. Now, one of the things I've taught, and I do teach in my charting course, I teach it here, teach it in my course. You don't stand in front of a freight train if you don't have to. If you think going through a Fed meeting like the one we had coming up, we don't know what the dot plot was going to look like. We don't know what they're talking about when they say they're tapering back. And we don't know a bunch of other things, such as the word transitory. How's that going to be replaced? So the Fed had its meeting. Now, I'm going to put up here and talk a little bit. You can hit pause if you want to read this. This will all be in my evening full research report. But suffice to say, the tapering's now $30 billion. We had been talking about that. That was the common idea. $20 billion treasuries, $10 billion out of the mortgage securities. Okay. We now saw the dot plot move forward, and it's all over the board, but it seems to be that most of it calls for 2 rate hikes in 2022, which is more aggressive than first anticipated, 3 in 2023. Again, this changes. You could get a market that doesn't get more COVID, but the labor market cools a little bit. You could get a market that the supply chain fills up fairly fast. You don't get the inflation pressures. Things can change. Be aware of that. They kept the Fed fund rate unchanged. They voted 11-0. So the rest of it you can read and see what it does, because there was a lot of questions asked of Fed Chair Powell. It was one of the better question and answer periods. He did a great job, in my opinion. He answered as best as he could. They can't even tell you what full employment is. They don't know. His answer was, as so many people in his position, it's made up of a lot of factors. Okay, but you can't tell me what those factors are. No, I can't, because there's so many of them and that we balance them. Basically, how it works, they get in a room and they figure it out. But no, there's no one thing that you're going to be able to put your finger on. So what did we do? We turned around and got a good rally out of all of the energy markets. What else? Stock indices turned on a dime. You had been down a couple of hundred. Now you went up nearly 400 points on that. I'll show you all these swings in a moment. The gold held key areas. It's still not through the 1800 level. The silver market came roaring back. The reason you're seeing these numbers up this much is you settle at 12:30 p.m. Central Time in the gold market. You trade until 4 p.m. Central Time. Well, that means that the FOMC statement comes out at 1 o'clock. The press conference starts at 1:30. Sometimes it ends 2:20, sometimes 2:30. It rarely goes beyond an hour, and that's how it went today. And now you get the yin-yang impact. What do I mean? Well, now Asia wakes up. God, I've been sleeping all night, right? I'm in Asia. I look what the Fed did. Gee, look at how the market reacted there. Do we agree with that or don't agree? Then you got to add to it the fact that many Asian banks meet this week and they come out with their monetary policies. So it's called the yin-yang impact. We had a reaction. Do they agree with it? And then when they agree or disagree with it, what does Europe do? And by the time it comes back to us, does it look the same? Does the market reverse again? You're all over the board. I've done this many, many years. Know how this works. This isn't your first rodeo with this. Use caution. The dollar went from the high to the low, basically, after the news. So you would think, well, high interest rates going to support the dollar. If you didn't use your head and watch that Bollinger Band, you got yourself in trouble. So in gold, we are still down 1.14% at this moment with a rally late in the market, still down $20, and the momentum is down in the market. When we take a look at the daily bar chart, you tried to probe through this market and start triggering downside of what do we have? A head and shoulder formation. If you drop it over, you still have a target in the 1675 area. Just pull the head on your chart and see where it would go if you use the shoulder. Where would that head end up? Just use a measurement from there to there, and it gives you an idea as to where you might go. The market stuck its neck down there and came back. So it's not a breakout yet of that at this point in time. In terms of the swing line, which is a line that I use to connect each daily bar, you can do it on 15-minute charts, 5-minute charts, whatever you want to do it on, it's bearish. It has a pattern of lower highs, lower lows. The resistance in the market's right here at the 18-day average, which is 1782.10. That's your first resistance point. This market's loaded with resistance. Next is the 100, then the 200, and this is a bearish chart setup. You did make, after you had the bearish setup here, I just want to prove a point. Watch these numbers. You get under, and now look, you probe down, and you came back. Market did make a new break low after you had the bearish crossover. Where'd the market find support? The lower Bollinger Band, if you take a look right here, was 1747.90. You made a run in it. Take a look at your window envelopes if you know how to use those. Again, the charting course. And if you're going to bounce, you're looking for the resistance in those numbers, and it's right what's happening. The bigger picture is that the Bollinger Bands are quickly wrapping their arms around the market. I expect this market to start churning, not trending, right through here now. Momentum-wise, momentum's turning up, bias down, trend down. Market's still all over the board, but the bears have the upper hand. Problem is when you have a reading that's oversold, and I define any reading in the slow stochastics with any part of the numbers under 30, it's oversold. And I don't think you attract new sell money in oversold markets. In the gold-silver ratio, well, magically, the 82 level from yesterday is giving a little bit of ground to 80.60 right now. You see that the silver is giving you a bounce. It's been embedded, and on the close today, and this would have been now for Thursday, let me come to Wednesday, the market still was embedded. Remember, it closed at 12:30. You're now picking up. Be careful. A little more of a pickup here on this market, and you can lose that embedded reading. I expect big-time problems, though, on rallies up to the 22.59 level. Copper went to the lower Bollinger Band and punched its way right back. If you haven't taken the enhanced Bollinger Band course, if this doesn't make it worth the money, then I give up. You don't know what you're doing. In the platinum market, lower highs, lower lows. Now, be careful. Tomorrow's an important day. You've seen the silver momentum. You see that you're turning up or trying to in the platinum. You haven't done it yet. And that means the pros are probably still going to sell this market on a rally. In the palladium, they'll look higher and see if they're going to sell that one. They're certainly not selling, in my opinion at least, into a lower Bollinger Band. First time you hit a Bollinger Band, you tell me, this was yesterday. Let's see, the lower Bollinger Band here, 1579, you didn't quite hit it. You went there for good measure today. Now you're getting your bounce. They don't sell Bollinger Bands. They wait for bounces, but I do think you're going to get short sales coming out in the platinum, the palladium market, silver market at this point in time. In the dollar index, you tell me, you haven't hit the Bollinger Band. If you haven't taken my enhanced Bollinger Band course, right now, stop everything you're doing. Write this down, iraepstein.com. Go to research, look at that course, get it for yourself. You're sitting here and you're going, what would I do if we went up? And I'm going to be telling you, I teach that you come out the pros because it's not embedded. If it gets there, they're coming out. You have an uptrend. You're still over the 18-day average. If you can get to that number, they're coming out. Bingo. And that's what the market did. So you put it together, and the question is tonight. You've got to get through the yin-yang impact to see what the markets want to do. After that, I'll be able to talk. And at 5:30, 5:40 in the morning, to be specific, I'll start recording what I've seen in Europe and Asia. New trade recommendations galore. There's going to be a lot of them probably tomorrow. And I do them first in my morning video. Video is about 20 minutes long. It covers in detail 40 futures markets with both short-term, long-term trades. Saturdays, I devote to the long-term trade. Sometimes it's Friday night where I just cover the weekly charts for you, but I mix them during the period of time. Your subscription doesn't enable you to get for free our phone app so you can watch what's going on with everything right there. When I put out an update, you get a push notification, or we can text you if you're in the United States. The push notification works everywhere, and it tells you what's going on. How do you get this? Folks, $7.95 for 20 videos, each approximately 20 minutes long, specific buy, sell. What are you waiting on? It's simple to do it. Go to the website. I'm Ira Epstein.